While you're reading this disclaimer, don't forget to subscribe, tap that like button, and throw up some gang signs or something. Hey there, and welcome to the next video in the Trading Basics video series where we're going to be going over some technical analysis. This is going to be just the basic overview of that, and obviously throughout the rest of this series we're going to dive in deeper little by little, but this is going to be very fundamental into moving into this, as well as the next video after this. I believe we're going to go into the trading terms that you'll need to know, which is definitely a video you're going to want to come back and reference. As usual, again, this is not financial advice. Use this for educational purposes only. I'm not telling you what you should do with your money. I'm just going over the concepts that I've used personally to help my trading out. And finally, next, before I jump in here, again, if you're watching this on YouTube, click the link in the description to access not just this video, but all of my free courses, all the videos in my free courses in our free members area, so you can get access to all these slides, any PDFs, guides, checklists, any other resources, as well as notifications of my free live training. So without further ado, let's jump right in. So price action and indicators. Price action, by the way, is just the movement of the price on the charts. What's going on in the markets? Where's the price headed, up or down, right? A lot of people I've seen memorize chart patterns. I kind of alluded to this in the one of the last videos. Is they're memorizing the names of, like, okay, well, this is it's a triple bottom, 1, 2, 3. It's gotta go up from here, right? As soon as it gets past this high, this is when you want to buy. You know, whatever. Maybe, but what if there's something going on here where the price is traditionally shot down again? There. Again, like, it's not going to be a cut and dry scenario every time. Or like head and shoulders. There's a million different chart patterns, again, that people are trying to memorize and, you know, recognize, oh, I see this, let me get in the trade now, kind of a thing, without looking at things through another lens. And you'll hear me repeating these phrases many times during these trainings. You want to look at your trades through multiple lenses, multiple confluences. You want to check a few different boxes, and especially the more you do it, the quicker you can do it. You know, just like stepping up to the plate. We use that analogy a lot. The more you swing the bat, the more you're gonna, you know, recognize what's a good trade, what's not a good trade, right? So again, are chart patterns a thing? Sure. Is it something you're going to memorize first and be a professional trader doing that? No. As a matter of fact, one of the first people that did it, again, this is something I got from my mentor. Please feel free to fact check this or whatever. But one of my mentors said that one of the first people that did this and wrote a book on it, where each page showed what happened, you know, like this. So when you see this in the market, this is what's going to happen next, kind of thing. The guy was on a plane, and like another person that he didn't know was a professional trader found out he was the author and started just asking him open-ended questions about it. And he's like, oh yeah, that's just bull crap. You know what I mean? Because you can't guarantee that this is exactly going to happen after you see a triple bottom or a triple top. There's no way. It's just not going to happen like that, right? The next thing is, like, you might see a pattern like this. And if you look underneath your chart and you have an indicator below or on the chart, you might be like, okay, well, this chart pattern happened, and the MACD is this, and the RSI, the relative strength index, is this and that. Or I have a range finder and a Bollinger Band, and if the price is in between here, if it hits the top, it's definitely going to swing down. Again, none of these things, indicators, again, show patterns, analyze data, give insights to price movement, and then there's other different visualizations on the chart or below the chart, like moving averages, range finders, MACD, RSI, all these different acronyms. Again, that's not important, to try and give you different views of that particular that particular price movement. Now, again, trading does not have to be complicated, and the reason that I put this on here was to make it sound more complicated than it actually is, because unfortunately, this is where a lot of people go down a rabbit hole and they confuse themselves more than they were before they started watching videos, okay? So again, one strategy or confluence, which is like merging of two indicators, is typically enough to enter a trade, right? Okay, well, I see a triple bottom, and then I see this going over these highs right here, and the RSI is this. Okay, two checkboxes that seem like they're both giving me a thumbs up that I should enter this trade. Okay, cool, I'll get in it, right? I personally don't really do either of these things. I mean, I kind of do what's called a break of structure when price starts to go above the previous highs or below the previous lows. Well, great. That's definitely one confluence. But again, memorizing this stuff, it's worthless, in my opinion. So again, the problem with these strategies is they're trailing indicators. Most of them, and again, a lot of the ones that I even will use, can be trailing indicators. Leading indicators have to do with like AI and trying to, predict the future. A lot of people say they can do that. It's not necessarily going to be the truth. And again, and like I put here, although I do want to trade along with a trend, it's also a very important skill to be able to predict where trends will most likely change. Again, where trends will most likely change, and will price action where price action will most likely reverse, and when and where to place your stop loss and take profit levels. And again, we haven't gone through these terms yet. We will here in the next video. But ultimately, a lot of people get in a trade too late, or they're setting their stop loss too low or in the wrong spot, or they want their profit. They think the trade is going to go to the skies. It's going to go to the moon, right? It's going to be amazing, and they're going to get a plus 10 or a plus 20 on this trade, 20x whatever their risk was on the thing. It's like, no, that's very unrealistic. And if you don't have an idea of realistically where the price is most likely to trend, if it's been going up, 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 where is it going to stop and reverse? Because it always will. Or if it's been going down, 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 where is it going to reverse and head back up? Because if you're selling, you want to know where to get out when it hits that traditional bottom so that you don't get reversed on and it wipes out all your profits, and vice versa with a buy, right? So you want to know these things before entering a trade, all these different things. So this is why I basically invented, through combining a bunch of my unique ideas as well as all my past mentorships of the past, into what I call the B.I.T method, B.I.T, which, by the way, has nothing to do with Bitcoin or cryptocurrency. It's just the letters of the three different things that I use. And order blocks is the first one, for B for blocks. It's the B.I.T method. It's not the OBIT method. That just sounds weird. So I made it simpler and sounded better, in my opinion. So order blocks. What is an order block? An order block is a place where traditionally the price is going to reverse directions. It's, basically the areas where major selling or major buying occurs. Now, again, 97% of retail traders lose money. Instead, I try to recognize where the trading institutions, the hedge funds, the banks, and everything, are selling or buying, and trade along with them. So again, instead of trying to fight against the hedge funds and institutions and everything, I want to basically make sure I'm trading along with them, or at least have an idea of where those big buys and sells are going to be on the price chart, because I want to make sure that I'm either avoiding them or, again, riding that kind of a wave or whatever, where I typically know waves are going to be, right? And then next, the I in BIT method, B-I-T, the I is indicator. This is, again, my proprietary premium indicators give you an edge. This is going to let you know which type of trade, either long or short, buy or sell, you should be looking for, and when buy or sell momentum has changed. Again, right. So again, order blocks might tell you traditionally where it has happened in the past. The indicator is going to let you know that it has happened, or it's in the middle of happening right now. It's very cool stuff. And then finally, trends. It's another, again, lens. I'm going to use this a lot. Another lens to look at your trades through. Using trends allows you to swim with the stream instead of against it. So what I try and relate to here, and again, I'm going to use these analogies a lot, is if you look at this right here, what shape is that? You might think, okay, well, that's a very thin rectangle. Is that like a long pencil shape? What is that? Okay, well, I'm going to show you from this angle. Well, it's still like a tiny, thin rectangular shape. But if I show you from this angle, you're going to be like, oh, that's definitely a bigger, wider rectangle or whatever. And, oh, wow, now I can see this in 3 dimensions. This is actually a phone, right? When you're looking at things through the BIT method 3-dimensionally, trades will make much more sense. You're going to be like Neo in the Matrix, and you're going to be like, oh my God, Adam, I saw you. You drew this in advance. It was on the chart. Price went right up to that level and then reversed almost exactly where you drew that line or that block or whatever it is, right? It's amazing to be able to anticipate these things by something that just recently happened, right? So again, we're going to be going into all of that. We're also going to be going into entering and exiting a trade. So again, you're going to learn number one, stop loss, which is your risk, how much you're willing to risk per trade, and you'll see exactly how much I risk per trade. Number two, you're going to see the entry, why, and then how to actually enter a trade. And then number three, your take profit. How much profit are you going to make on that trade? Do you want the price to come up and hit your target, or there's actually a way to hit your stop loss but still make money? Again, that might not sound like a good thing, but it is. It might not sound like it makes sense, but it will. Keep watching all these videos. Looking forward to sharing more. And up next, we'll be going into trading terms first. So again, it's going to be a very good video for you to be able to go back and reference. And again, get in the members area, download the PDF or the slides for the next training, because those slides you're going to go back to and reference a lot of times. You're going to pause my videos and say, what did Adam mean by drawdown? Oh, that's what drawdown is, right? So you're going to be able to learn these terms and look them up much more effectively. And I've got the accompanying video up next. We'll see you guys then. And remember, please like and subscribe these videos as well. Subscribers will definitely help the channel grow. We got to help more people have success with trading. I need your help to do it. Take care, guys. We'll see you in the next one.